Moving over to the grain markets now. This week, we are joined by Luke Beckman of Central Valley Ag. Well, Luke, last week we seemed to have some bullish sentiment in the markets. As we have this conversation today on Wednesday afternoon, it seems like the bears are holding things back. What's your current take on the situation?
Well, Bryce, I feel like it's really a momentum conversation. This market is continually needing bullish information to push it to new heights. And really the planting season or wet planting season for the North has more or less run its course. The price action's telling you that it's not really concerned about, the acreage situation in the Dakotas and Minnesota. And so we're starting to see some of that bearish momentum come back into the marketplace. And if you look at open interest data, really for the last several trading sessions dating back to last Friday, you're starting to see open interest increase as prices move lower. So that really tells us that there's some new shorts coming into this market, which is different than the trading behavior that we've seen in this long-running bull market. So it's really a question of momentum. Fundamentally, not a lot has changed with this market, if at all. But we just don't have any bullish inputs in the near term to really push us as we move into June. We'll need to see some weather risk or weather premium come back into this market as the forecasts change. But for now, you're really seeing a cool forecast with ample precip to really get this crop started in pretty good shape.
Look, when it comes to the weekly crop progress reports, you mentioned to me there's only a couple of states you're really watching on that front. Which ones are those?
Yeah, we were behind early, Bryce, in the planting season, getting corn and soybeans in the ground. But really, the nation's caught up pretty quickly. Really, North Dakota and Minnesota are your key concerns at this point. The USDA had them at 56% planted in North Dakota, 82% in Minnesota. And then on the soybean side, 23% in North Dakota and 55% in Minnesota. So really, those two states have been problematic. They're excessively wet. You're definitely going to have some prevent plant acreage in both South Dakota, North Dakota, and Minnesota. So the question is how much? It feels like we've picked up some corn acres from what the USDA would have reported at the end of March. But I also think we're dealing with some additional prevent plant acres that they probably weren't counting on, at least when they put the numbers together at the end of March. So net, where do we land? Are we going to be close to that 89 million acres that they reported at the end of March? That's going to be the big question that we have yet to see. We're going to see that at the end of June when they release the planted acreage report. That survey is going to be taking place in early June. So really an interesting set of data that the market's going to be anticipating as we get a few weeks down the road. Before we get to that point, though, we have to talk about the June supply and demand report.
Yeah, and we'll do so here in a minute, but I want to go to something. We've got some news on the ethanol front, Luke. What can you share with us about that?
Well, there was a headline today, Bryce, that the Biden administration is really looking at upping the blending volumes of ethanol into our gasoline supply. They're basically looking at volumes that have been blended in up to this point in this 2021 year. And so likely that they're going to raise the obligation from 13.3 billion gallons to 13.9. That news broke today. You're probably asking then why were corn futures down so hard? Really, the blending requirement is more a compliance situation. And so you saw the renewable identification number, or the RINs. That market was up about 11% on the news, basically because if you're a blender, it's going to require you to blend ethanol into the fuel supply. Or if you're unable to do that, you have to buy credits to replace your obligation. And so those credits were up on that news that potentially we're going to be blending more ethanol into the fuel supply in calendar year 2022.
Well, Luke, you teased the next World Agricultural Supply and Demand Estimates report is coming out June 10th. What are going to be the numbers you're most interested in when that report comes out?
Yeah, so this June report is just their regular run-of-the-mill update of global supply and demand balance sheets. Of course, the U.S. is included in that. Really, last month was the first time we saw the new crop balance sheet. That's the first time they published the 22-23 new crop estimates. Really wouldn't expect a lot of changes to the new crop side. If you remember back in May, they had actually lowered the yield from what their February outlook forum suggested, which was a bit of a surprise. I think at this point, they'll pause, they'll wait to see additional crop data before they really adjust the supply side in that June report. So it's really going to be a conversation about how do the old crop supply and demand balance sheets change. If you look at the cash market, domestically, things are red hot. The ethanol margins are robust. You've got soybean crush margins that have come off a fair amount, but they're still positive. And so the cash market's telling you that grain supplies are tight for old crop. So will the USDA acknowledge that further in the June S&D next Friday, the 10th? That would be something to be watching for. Additionally, if you look at the global balance sheet, Brazil's second crop corn has really entered a dry stretch over the last 30 to 60 days. So will the USDA acknowledge, any cuts to the Brazilian safrinha crop and see that number work lower? That would be supportive to the global S&D situation for corn. And probably the last thing I'm interested in looking at in that June report is going to be, are there any additional updates for Ukrainian production? What does the USDA see going on over there as they have an additional 30 days of information and data? Did the Ukrainian farmer have a chance to get acres seeded like they thought? All of that information will be updated, next Friday the 10th.
All right, Luke, as we like to do to round out our market segment, any piece of risk management advice or recommendations you're offering to producers this time of year?
Well, we mentioned that the cash markets are pretty hot. If you look at, basis values across the state, you're seeing strong overs in a lot of your key ethanol processing points. You're also seeing rail values really start to perk up as feed markets to the west and south are really pulling on the corn pipeline as well. If you remember back a year ago, the cash markets really peaked about this time a year ago. It was the middle of June before things started to break. So if you're a hedger and you're sitting on hedged inventory as a producer, you really need to be taking a look at that and probably liquidating that ownership soon. Beyond that, if you have flat price risk, seasonally these markets really turn once you get to the 4th of July. So I'd really encourage producers to be looking for an opportunity to shed old crop length in the next 30 days. And additionally, ask yourself the question, how much of my crop do I want to have marketed before harvest if you are a forward seller? If you are a forward seller, we would encourage you to get to that level in the next 30 to 40 days before these seasonals start to turn. Of course, we had a blip in the road so far this week with really weak price action, but really no weather premium in this market. Should something develop, would expect that this market would snap back and provide some opportunities pretty quickly. But have your finger on the trigger, be ready to go. As this week shows, these markets can move pretty quick, so don't take them for granted.